Good morning and welcome to 7 at 7 from the Economic Times podcasts, a daily financial news capsule to get you clued in for the day. It's Monday, the 9th of September, and I am your host, Bhaskar Datta. It looks like this week is going to kick off on a volatile note for markets, as jitters about the US economy are likely to drag Asian stocks sharply lower after a plunge on Wall Street on Friday. The trigger? The release of the latest US non-farm payrolls data and increasing market speculation over whether the world's largest economy is headed for a soft landing or a hard landing. Data released after Indian market hours on Friday showed that US non-farm payrolls rose by 142,000 jobs last month, lower than a Reuters poll of 160,000. However, the unemployment rate, which is as crucial when it comes to gauging the health of the US economy, fell to 4.2% from 4.3%. Federal Reserve officials have not sounded any alarm bells, and the broad narrative is that of the US having managed to achieve a soft landing or minimal damage to the economy after 2 years of rate hikes. But markets aren't entirely convinced, with the S&P 500 and the Dow registering their largest weekly drop since March 2023. All investors can now do is wait with bated breath to see if the Fed cuts rates by 25 basis points or 50 basis points on the 18th of this month. Turning now to the world's second largest economy. China will fully open its manufacturing sector to foreign investments and carve out more room for overseas capital in its health sector, Bloomberg reported. The steps by Beijing are part of ongoing efforts to revive the Asian giant's economy, which has suffered over the last few years, particularly in the aftermath of the COVID crisis. Beijing will remove the last remaining limits on investments from other countries in the manufacturing sector from November 1. And cut its list of areas that are restricted for foreign investors, according to an official statement. As we turn to today's domestic roundup, we're going to stay with China. The Adani Group has formed a subsidiary in China to provide supply chain solutions and project management services. In a regulatory filing, Adani Enterprises, the group's flagship firm, said that a Singapore-based step-down subsidiary has incorporated a wholly owned subsidiary, Adani Energy Resources, domiciled in Shanghai. Coming in on the back of recent developments like a planned joint venture between India's Dixon Technologies and China's HKC, as well as recent government approvals for Chinese investment proposals, it seems the business side of the Sino-Indian relationship is taking strides. Here's the latest boost to India's chip-making plans. ET had learned that the government is considering an extension of the fiscal support period under the second phase of the India Semiconductor Mission to 8 years from the current 5. People in the know told the newspaper. On a related note, remember the Adani Group is the latest to enter the semiconductor space by reportedly planning a $1 billion fabrication unit to build a semiconductor fabrication plant with Israeli company Tower Semiconductor. When it comes to battling financial crimes, the government is going all guns blazing. It has banned over 24 websites allegedly laundering money from illegal offshore betting applications that were masquerading as e-commerce and forex trading portals. This follows investigations by the Enforcement Directorate. The companies include OctaFX, Fairplay, MagicWin, Mahadev Online Book, and 30 others, operated by promoters located in Spain, Dubai, Russia, and Pakistan. It seems that Apple is developing quite the love affair with India, the world's fastest growing major economy. In a first, a made-in-India iPhone 16 series will be available across the world within the first few days of the launch of sales, ET has learned. Apple is scheduled to unveil the latest range on Monday, and worldwide sales are likely to begin within 10 to 12 days. Remember, Apple's business in India crossed rupees 2 lakh crore in fiscal 2024. And the company's ecosystem will likely create 600,000 direct and allied jobs by the end of this fiscal year. We end today with the latest developments on the company that's been positioned as a major new force in the financial services space. Jio Financial Services Limited announced on September 8th that it has entered into a joint venture with BlackRock Advisors Singapore Pte Limited to launch a new investment advisory company, Jio BlackRock Investment Advisors Private Limited. The joint venture was incorporated on September 6, 2024, and will focus on providing investment advisory services. That's all for today. Thank you very much for tuning into 7 at 7 from the Economic Times podcasts.